Welcome to Trading Mastery Institute. Whatever that is being shared is of our opinion and not an advice for you to enter the market. Okay, guys. So now we are on the gold chart. As you all can see, that is the market currently is trending, but it is choppy, or there's a lot of pullback. So as a trader, we need to observe and adapt accordingly. Change our entry position. Okay, so now I would like to show you guys the Novak trading system, how we use it. So over here we have the enhanced support and resistance. This to show that there is a major support and resistance. Whenever the candlestick or the price hit and bounce from this area of support and resistance, we are supposed to look for a long or buy. Okay, when we hit, we look for a buy. About to hit, we look for a buy. Over here, look for a buy. Okay, look for a buy after every rejection or bounce of this area of support resistance. And next we have the equilibrium line. So it will help us on intraday trading. Whenever the candlestick is above, we are looking for a buy. Below, we want to look for a sell, but because it bounced off, then we don't focus on sell. Okay, or we are like want to do a sell very close to the support, so we don't do that. So meaning the higher time frame support and resistance over here help us to use this equilibrium so that we don't confuse. So if below here, why I must sell and I hit by stop loss? Okay, up, at least we have a probability later on it still go up in our direction. So it complements each other. So next we have the cloud. Okay, the cloud is a dynamic support resistance which show direction of 3 time frame higher. Okay, so this is for intraday. We want to use this to guide us. Next one is the Tenkan-sen line or the fast line. Okay, it guides us on the current time frame, which is this time frame for direction and entry. Okay, and the Kijun-sen or the Kijun-sen is also to guide us on the direction. So as you can see, we have a lot of indicators to assist us on direction, because in trading ultimately is the direction. Entry, you can use your own method. Okay, and finally we have the arrow to help us on the direction or the entry as well. Okay, so over here, okay, let me just change here, put the cloud. So how do we do our entry model after we know the direction? So by one look over here, we know that okay, candlestick is in the cloud and it's very close to the high time frame support resistance, so we do not want to do a sell. So suddenly we see there is a strong breakout over here. Okay, there's a strong breakout above this arrow here. There is this high over here. Okay, so once there's a break, we say that in future the price going to retrace, because this is a pullback market. Okay, so where do we look at? Okay, from this movement, there's this arrow. Okay, over here, an arrow over here. So from this arrow, we see that there is a support and resistance. Okay, just give me a minute. Let me just add in. Okay, there is a support and resistance at this arrow here. So what do? Okay, we wait if there is any rejection, okay, in this area here. Okay, as you can see, there's a rejection here. Okay, and the candlestick close above the blue line. Okay, oh, I mean the blue line, yes, correct. And then you can enter a long with a stop loss below over here, about 100 pip. Take profit is about 200 pip over here. So it went up to about 345 pip. Okay, so this is our entry model. Some of you guys may say that okay, there's another arrow over here. Okay, so it doesn't really go in this area, and it is red and red. So meaning the Novak flow and trend does help us on the filtering which area to enter. Okay, so I want you guys to see that our system are able to assist us on the false movement. So from this movement, so what do we see over here? We see that is a break of resistance over here. Okay, so once there's a break of resistance, we say that in future the price is going to pull back. Okay, going to pull back. So where is our identify our support? Okay, so this is the movement and this is the arrow. So before this, there is a bearish candle. So we draw over here. Okay, so we draw over here. So when here and touch this area of internal support, okay, and there is a rejection, but it doesn't close above this blue line or the Tenkan-sen line. Over here, then there is a close above and there's an arrow. So what you do is you do a buy, okay, stop loss below over here, okay, it's about 70 pip. Over here went up to about 230, so we are able to get our 1:2 risk reward. Okay, then the next one is we see another break of resistance over here. Okay, so we draw our internal liquidity. So this is the internal liquidity, the arrow, bearish candle here. So we just draw over here. Okay, we just draw over here like this, and then the price went down. Okay, so over here there's an arrow. Okay, we are not supposed to enter because nowadays there is a lot of pullback. Okay, and if you see Novak and Flow, they are both not in synchronized. So it went down, it went in this area here. Okay, and then there's a strong rejection with an arrow, candlestick close above these two blue and red line or the Tenkan-sen Kijun-sen line. We enter, and then over here stop loss. Okay, here is quite huge, about 150, so we only take about 100 maximum, okay, because we want to get our risk reward. So up here it went up until about 350 pip. Okay, 350 pip. So the next one, we see here there is a break of resistance here. Okay, there is a break of resistance. So we are saying that in future the price is going down and going up. So this is the movement, right? Not this is the movement. So this movement, there's a bearish candle. So we just move here. Okay, so for this, it went down. Okay, went down, it hit all the way below because it's looking for not internal liquidity but external. Okay, this is the blue line. You see, it search for the external. So if normal trader, when they see this, they either want to do a sell, the FOMO trader want to follow a sell, or they are shocked, not sure what is happening. But for us, we know the price now hit the internal external liquidity, and we see that there is a rejection over here. Okay, rejection, and then over here there is an arrow, candlestick close body above the Tenkan-sen and Kijun-sen line. Okay, and we enter a long. Okay, so we take our stop loss, okay, at middle of this candle, okay, because it's long. We take about 100 pips around here. It doesn't hit, and then it went up to about nearly 310 pips. Okay, and then what do we see here? We see another movement, break of this high. Okay, break of this high. Let me just see here. Break of this high. Okay. Okay, break of this high. So now where is the movement? This is the movement. So this is the bearish candle. Okay. So this one is quite huge. Okay, quite huge over here. This is our internal liquidity. So it went down. There's a rejection over here. It closed above this Tenkan-sen line. If you're not sure, you wait for the arrow. Okay, you enter. Then stop loss below here is about 100 pip or so. And then it went up. Okay, so about here about 390 pip. So that's how we tackle the issue of pullback in trading gold because of the pullback movement that our members are encountering. So I hope you can see that our Novak trading system are able to help trader on the direction, the most important. Okay, second is to see where are the area of liquidity. Okay, so I hope this video able to help you guys and grow your account. Once again, thank you for all your support, and we are also supporting you guys as always from time to time. Okay, see you guys soon. Goodbye.